Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, yesterday we got to see some crazy moves on DXY. We have been discussing about the possibility of an upside on the chart of DXY because we had a clear wedge pattern, which is a trend reversal pattern, and as per our expectation we got the move also yesterday. And surprisingly, after few hours we again saw that market did not have the power to go up, and we again saw market going down. Right now you can see that after forming a massive green candle, the XY is still trading at 102.38, and the reason is that though we have a wedge pattern technically, but fundamentally DXY is not very bullish. So as a result, we did not see market going towards the upside or the trend continuation. And this is the main reason I always tell you guys that for a trend reversal, we need a news, we need a fundamental factor. Without a fundamental factor, without a news, we cannot have a trend reversal or change of direction. And tomorrow is a big day. Tomorrow is CPI. So tomorrow's inflation data will be very important for the market. So today market will be mostly waiting for the news. So as a result, you can expect that market will remain within a particular range. So the range of DXY is 103.50 and 101.50. This is the range of DXY. This is the support level in case DXY starts falling. This is a support where you can expect the DXY to reverse, and the resistance is around 103.50 because of the moving average as well as the previous resistance around this area. And if you look at the US government bonds chart, you can see that right now government bond is standing at the dynamic resistance here, and there is a possibility that we may get to see some correction or downside during the day because the chart is not very bullish. And if we look precisely, then we'll see that market is forming lower highs. Lower highs usually signify increase in number of sellers or the buyers losing their strength. So as a result, there is a possibility that we may get to see some downside during the day on the chart of US government bonds. And if it shows downside, then obviously we will see some upside on the chart of gold. Now let's talk about gold finally. So yesterday we saw our levels working very nicely. So yesterday when I made the video, market was standing at the support of 1988 or 89, and it was our first support, and we saw a perfect bounce from the level. Then during the day, not during the day, during the evening, okay, if I consider my time zone, okay, we saw market testing our second support of 1981 to 1982, and we got to see a perfect bounce again. I received many emails and few WhatsApp messages also that, sir, your levels work perfectly fine. But I was on a session of the we had a pro trader session on the group, so I missed the opportunity. Because while having the session, someone asked me on a group, yes, sir, what's your opinion regarding the chart of gold? When I opened the chart of gold, I saw that my level was gone. Okay, because I did not set any buy limit. So you can see that these are the levels for the day. First of all, let's talk about the level of 2000 to 2001. This is the first resistance for the day, and my dear friends, this is not a proper resistance. Probably you know by this by the time that not all the levels on the chart are of the equal strength. So 2000 to 2001 is a minor resistance for the day. And as we have volume here, you can see the market has recently formed a big candle, so market has volume. So there is a possibility that it may not work. This is a minor level. After a few hours, observe the market around 2001, 2000 level. If you see market shows a reversal, go with a small lot size. If you see the reversal continuing, Then you can add up few more lots and you can continue with the position. Expected pips 50 to 60 if the level works. This is our first resistance. You need to be careful because the last candle form of the market has got some volume, and the green volume, buyer's volume, can be a danger. And the second level or the second resistance for the day where we have some sellers sitting is 2007. If market breaks the first level, if you see market going up, then observe the market around 2007 level. If you see market struggling around this area, if you see the market is showing price rejection from above on the hourly time frame or on the 15 minutes time frame, you can look for a sell. 2007 is a better resistance in comparison to 2001 or 2000 level, because right now we can see that market has got some bias in it. So whenever you have got bias in it, there is a possibility that it may break the resistance. Try to understand my point here. No level is permanent in the market, so as a result, you need to decide when the market will hit the level. This is the main difference between a trader and a gambler. A trader only trades when the opportunity is right. If we see 10 trading opportunities on the chart or on any day, we may have 10 to 12 trading opportunities. But out of 10 to 12 trading opportunities, you will only get 2 or 3 good trades. A trader only will try to go for 2 or 3 good trades out of 10 to 12 trading opportunities. So here also observe the market around this 2001 level. If market shows a reversal, go with a small losses. If you see that okay, market is going down, then you can continue with sell position, or you can also add some few sell more position. Okay, and in case market breaks the level here, then observe the market at 2007 area. This is your second resistance. During the day, if market starts falling, observe the market at 1981 level. Observe the market around 1981 level or the previous low made by the market, and the reason is that market has constantly forming lower lows in the market. You can see here market is constantly forming lower lows. So at this time there is a possibility that market may take support around the previous low, and the reason is that tomorrow we have CPI. Market may not go for a breakdown. If you see market taking support around 1981 level, you can go for a buy position as well. But if you see, just like the previous time, market is falling with big red candle, then obviously use your common sense. Okay, don't need to take a buy position. Then you will get the clear idea that market will be breaking 1981 level, because what is the present structure of the market? The present structure of the market is like this. Market is forming lower lows and lower highs. Okay, but tomorrow we have CPI and market has already been forming lower lows. So that's why we are thinking that if market may take support this time. But if market doesn't listen to us and breaks the support, obviously you need to avoid. The best support or the best level that I think on the chart of gold is 1968. 1968 to 1968.50. According to me, this is the best level on the chart of gold. This is the strongest support on the chart of gold. I think if market starts falling, okay, then we have a good support, and definitely we can expect a good bounce from here. At least we can expect a bounce of 60 to 70 pips, because overall we have seen that market has been respecting our levels, and this is the next level. If not a trend reversal, at least we can expect a bounce like this on the chart of gold, and a bounce like this will be sufficient enough for a day trader. This is a level good for day traders, not for swing traders, but still 60 to 70 pips is quite decent, isn't it? So that's all about the market. If you're a swing trader, then my dear friends, please wait for tomorrow's CPI. After CPI, market may give us some indication that in which direction the market will be moving next. So it's better to go for a quick entry and exit that we have been doing for the last couple of days and weeks. And on the chart of gold, the best support is around 1968 to 1968.50. If markets drops to the level, we can definitely expect a bounce. But market is forming lower lows and lower highs. This is the present structure of the market. But as the market has been continuing the structure for the last couple of days, so this time we are hoping that market may take support at 1981 level. If market doesn't listen to us, okay, and market does not take support around 1981 and breaks the level, you can also look for a quick sell for 30 pips, 30, 40 pips, not more than that. And in the form of resistance or the sellers, we have the best level around 2007. If market reverses, we can go for a sell. Before 2007, we have another resistance around 2000, 2001. But we are kind of skeptical with 2000, 2001 level, because recently we could see that market form a green candle. Okay, so the buyers are present in the market, so it may not work. Time will speak. After a few hours, we'll get to know whether the level works or not. So be careful, follow proper risk management. Bye bye, take care.